Hello, ladies and gentlemen. This is Jesse Colombo, Cyber Trading University's Forex and Futures instructor, and I'm happy to announce that we're going to be having our closing bell webinar with Michael Tawill from Market Traders Institute at 4:30, and he's going to be discussing how to use Fibonacci's Golden Ratio to win 90% of his trades. So it's definitely going to be very interesting, and I'll be watching intently. But until then, I'll be doing my daily Forex and Futures update, as many of you have come to expect. So we had quite a bit of data come out today in the U.S. Financial markets, and one of the most notable pieces of data showed that America experienced deflation for the first time since 2009. So I'll just show you that chart right here, and this just shows that the prices for goods declined 0.1% year over year in January. So definitely something to pay attention to. And one of the major reasons why this happened was because of the oil bust that occurred since June 2014, when oil prices dropped from around $110 a barrel all the way down to pretty much in the high 40s right now. So that caught many market participants by surprise. But on the other hand, we also had a very strong durable goods report today, and that caused the U.S. dollar to spike, which punished non-U.S. currencies. And I'll be showing you charts on that shortly. And tomorrow morning at 8:30 a.m. Eastern Time in the United States, we have a GDP report that all traders, or most traders, are going to be watching very closely. So definitely pay attention to that. But for now, I'm going to go and take a look at the charts, starting with the S&P 500. Let me draw my lines. So for those of you who have been following along, as I showed before, this breakout from this wedge or triangle pattern, you can see it broke out here in early February. And I discussed and showed how it was following this trend line up. So it pulled back a little bit today and then rebounded toward the end of the day. So I just want to see if it's going to either bounce off this uptrend line or if it's actually going to close below. But it's a little bit too early to tell. So for now, I'm watching this channel. Nothing has really changed in the last few days in terms of the actual signal. And let's take a look at the Dow, which looks very similar to the S&P 500. Didn't fall as much as the S&P 500, but basically I'm connecting the lows here during this rally, and I'm still watching that channel. I'm watching 18,100, which is the December high, and also a major round number as a likely support if the Dow does pull back. But for now, it's in a confirmed uptrend as it follows this channel all the way up. And it's very possible that tomorrow's GDP data will be an important catalyst that could cause some sort of a directional move either way. On to the NASDAQ 100. See, this has been one of the strongest indexes, and I said this before the breakout, how tech just had a higher relative strength than the other sectors out there, partly because of companies like Apple just been outperforming the rest of the market. So that's why you have this steady, vibrant uptrend in the tech-heavy NASDAQ 100. So like the other indices, it's climbing this channel, and it looks like there was a consolidation over the last few days, and now it pushed above there. So that's definitely a sign of strength. Also, it looks like the NASDAQ 100 touched the uptrend line and then bounced off of it. So that's usually a sign of strength as well, and it's very possible that it will continue to rally from here, of course, barring a GDP report tomorrow that causes a sell-off. But assuming it's good news or neutral news, I wouldn't be surprised to see the NASDAQ 100 try to gun for the top of this range right up here. It's hard to see it on this chart, but it's very possible it could bounce off of here. So keep watching that. Japan's Nikkei is really starting to surge right now. This is something I've been discussing since this wedge consolidation, and once it broke out, I told everyone in the cyber group room, I said, this is a good opportunity if you're interested in trading Japan's stock market surge or rally. Different ways of playing it. You can trade the EWJ ETF that trades within the United States, or you could have traded options. So got a nice boost today, and that's partly because the yen fell, as I'll show you shortly. Like the U.S. stock indices, it's following a channel. So there's a good chance it's going to touch the top of this channel and then possibly bounce or maybe bump its head for a little bit and consolidate for some time. It's a little bit overbought. I definitely wouldn't be buying here, but if it does pull back a bit, maybe touch the bottom of this channel or just consolidate in a horizontal manner for a few days and then possibly breaks above there, then I would consider that to be a secondary entry point. But really the time to have entered this trade was back in early February when it really broke out in earnest. But there's usually opportunities on pullbacks, but I just prefer to buy immediately upon a breakout just because you have support right underneath you, and it's less likely it's going to pull back a very high percentage. So that gives you a little bit of a cushion when you buy immediately on a breakout like that. All right, let's take a look at the US dollar index. See, now we're starting to see some interesting action, and this is following what I said yesterday because I showed how the US dollar pulled back a little bit, and I was showing this range that we've all been watching for the last pretty much over a month now, where it's just been going sideways. And I've been saying how I believe this is going to lead to some sort of a major trend move when it finally breaks out to the downside or the upside. And yesterday it broke and touched the lower end of this range. It wasn't able to break it. Sure enough, it surged above. And well, it didn't break out yet, but it surged right off that support. So if you're a range trader, there's an opportunity to trade. Basically, you can short if it hits resistance and buy when it hits support and so on and so forth. But eventually it's going to experience some sort of a breakout. And when it does, it's probably going to move pretty big. So it's very possible that we could be seeing the start of a trend just because it's a very tall candle and one of the first big moves in a couple weeks. So I just want to see if it's going to try to touch that resistance and then maybe try to break through. But this surge in the U.S. dollar caused non-U.S. currencies to fall just because they have an inverse relationship. So here's the euro versus U.S. dollar, and you can see this triangle. I've been discussing this for quite some time, and I suspected that it would break to the downside just because the prior trend was down, though at the same time I was a little skeptical just because this trend is already quite established. And whenever you have these late stage consolidation patterns, they sometimes tend to be reversal patterns rather than continuation patterns. But of course, I trade in the direction of the trend. So right now, it appears that it broke down from here. As further confirmation, I'd like to see if it can break the late January low, right around 1.11 to the U.S. dollar. So if it can break below there, that would definitely be an added confirmation that the euro is falling. And also, if I was interested in shorting the euro versus U.S. dollar, I would want to see that consolidation in the U.S. dollar index break to the upside just because of that inverse relationship, and that gives added confirmation that makes me feel more confident in placing a trade, and it's definitely a lot less likely to head fake you as you take the signal. So I look to multiple markets to confirm each other, and it makes me feel more confident in my trades. Here we go. This is the dollar yen. You can see because the dollar strengthened today and the yen weakened against it, that this pair moved up. And that did partly contribute to the surge in Japan's Nikkei stock index. And if it breaks to the upside, and let's say we were to see a continuation move, let's say we see a move like we saw similar to starting in October up until early December, and that continues from here. Let's say if it does break, that would definitely cause Japan's Nikkei stock index to continue to rise. And the reason why is because the weak yen, or when the yen weakens, it leads to strength in Japan's stock market, because many of the companies in Japan are exporters, and they benefit from a weak currency because it makes their exports more competitive on the global markets. Let's take a look at the Australian dollar versus US dollar. I'm just going to show you on the weekly, because I've been watching and showing this downtrend line. And as I said yesterday, I was watching to see how it would act when it hits this downtrend line, which is a resistance, and if it was going to be able to break out above there and maybe continue, or if it was going to bump its head and continue to fall. And I've been showing this consolidation pattern for the last couple weeks. So it bumped its head, it fell, which is not surprising considering that it trades inversely with the US dollar index. So now I want to see where it's going to head from here. Still really no trade signal. I would consider a strong trade signal if it managed to fall back down to 0.77 against the US dollar. And then if it can break below there, below basically clearing this consolidation pattern that formed since late January, that would be a sign that this downtrend will continue. So really just have to keep on watching that. Also, as a secondary confirmation, I would like to see these lows of early to mid-February broken as well, and they're right around 0.762. That's what it appears to be right now. So I want to see break into new territory to the downside as a confirmation. But you can definitely see how it bounced right over there. That is not a coincidence, definitely not random. Onto the dollar Canadian, US dollar Canadian dollar pair. And it's still within that triangle, though it bounced off that lower bound of the triangle. Not terribly surprising because the US dollar strengthened, and also because oil fell today. I'll show you the chart shortly. And the Canadian dollar is highly correlated with oil because oil is one of Canada's major exports. So for now, I'm not seeing a real trade signal on daily, unless you're interested in trading the range, which some people do. Certainly if you're an intraday Forex trader, that's one way of going about it. But I want to see if it's going to clear this downtrend line, which is resistance, and maybe make a continuation move like what we saw this past fall. So just keep watching this. And let's say if this were to break out, let's say the US dollar, Canadian dollar did break out and this pattern proved to be a continuation pattern, I definitely want to see the US dollar index break out from its consolidation too for added confirmation. Just take a look at oil right now. So oil is now at $48.84. This is West Texas Intermediate crude oil. So it continues to bounce around in this range between $54 and basically the $47.60 or so. So it's just bouncing around. I just want to see if it's going to break one way or another. There's a very good chance it's going to try to retest its lows that were reached back in January. And if it does, I wouldn't be surprised to see it hit 40, just because $40 per barrel is a support level, key psychological level that goes all the way back to the first Gulf War back in 1990. So I've been saying this so often, it would be very surprising that oil would fall this far and not at least try to touch that key level. And also that marked pretty much the lows back during the global financial crisis in early 2009. So it would really be very surprising if we didn't see at least a 40 print on West Texas crude and Brent, because those were the lows in both contracts in early 2009. So I'm not predicting here. I'm just basically using deductive reasoning to figure out what's the most likely move. let's see, probably a downtrend line. Okay, here we go. Seems like that has some significance as well. Appears that prices have been following along here. Maybe it's trading in a little bit of a channel, but for now it's just range bound. And let's say if the US dollar index did break out to the upside past its consolidation, that would definitely put pressure on oil because they trade inversely. And one of the main reasons why oil began to plunge starting back this past summer in summer 2014 was because of the very sharp rally in the US dollar. On the other hand, let's say if you are looking for an oil bottom and looking to be a buyer in oil, you're probably going to want to see a breakdown in the US dollar index, once again because of that inverse relationship. So just the US dollar index is really that key linchpin, and is so important for understanding so many other financial markets. And I definitely consider my trading philosophy, my technical analysis philosophy, to be one of intermarket analysis, or basically looking at different markets to confirm one another. All right, so let's take a look. What else we have here? Let's look at the New Zealand dollar, something I've been discussing too. I've been following this story pretty closely. So we saw this wedge pattern, consolidation pattern this past fall. And then when it broke down, I wanted to see if there was going to be a continuation move. I'm going to show you on weekly what I was looking at. So basically just think of this as a wedge. And I was curious whether there was going to be a move of a similar magnitude like what we saw this past summer and fall. So when it finally broke down back in January, I was looking for a possible secondary entry point, let's say for those who didn't get in early on, and I was expecting that there was going to be a retest of the breakdown because that's just such a common pattern that occurs in the markets. And I was showing the lows back in January and December right here, right around 0.76, and showing that it's probably going to test those levels. Many of you have heard me say this so many times in Cyber Group. Well, that's exactly what happened today. It touched pretty much exactly that level, just above 0.76 to the US dollar, peaked its head above there, and just couldn't close above, and then fell back below. So that's very interesting to see this happening, but not surprising. So this, in my mind, this is not quite a sell signal just yet. And because right now we're just watching, it seems like it's in some sort of a channel. So I want to see if it's going to break below that channel. If it does, that would, in my mind, I would feel better about shorting it if it does. On the other hand, let's say if it does try to retest or re-retest 0.76 and break above there, that would definitely negate the bearish thesis here. But for now, I'm watching to see if there's some sort of a sell-off below this rising up trend line. So just keep watching. And if you're interested in going short on the New Zealand dollar, you're going to want to see a bullish breakout from the US dollar index's consolidation pattern that I discussed, just because, once again, it goes back to that inverse relationship that I keep going back to over and over. A few people are aware of that, and very few people are cognizant of that relationship. And I believe they're really missing out of important trades and also their own knowledge just by not knowing that simple concept. Let's take a look at the British pound. And I showed how earlier this month it broke that downtrend line. And right now, like many of the other markets, it seems like it's following a channel. Channels are just such a common pattern that markets tend to follow. So right now it keeps bouncing up and down in this channel, not seeing a real breakout or breakdown. But what is very interesting, as many of you will remember, I discussed 1.55 to the US dollar as a likely resistance level because it's a round number, and also because it pretty much marked right around near the lows in late December. Well, look what it did, similar to the New Zealand dollar. It tried to break above, couldn't do it, created a bull trap, and then sold off right to the lower bound of this channel, this uptrend line, which is a support. So now I want to see what happens next. I want to see, is it going to break below this support line and continue on lower, or is it going to try to gun for 1.55 again and finally break out? So keep watching those. And I'm going to briefly look at gold because some of us are interested in gold and silver. Once again, it's another channel. Gold is rebounding off that key 1200 level, which is a major psychological level. Still within the channel. It touched the top of the channel and then sold off. So I don't expect a major directional move or a trend change until the US dollar index breaks out or breaks down one way or another. So let's say if the dollar index breaks out to the upside, that's bearish for gold and probably cause gold to continue following this downtrend, this downtrending channel, and maybe reach the lows that were reached this past fall. On the other hand, if there's a dollar breakdown from that consolidation, I would not be surprised at all to see gold break above this channel and then try to gun for its recent highs back in January, right around 1,300. I think that could be good for a 100-point trade if that does happen. I would consider going long with futures if that did happen, assuming there was a real confirmation in the U.S. dollar index. All right, folks. Any questions? Actually, in 9 minutes, Michael Tawill will come on, so we don't have a lot of time. But if you have any brief questions, I'll try to answer them. But until then, stand by. Fausto will come on and introduce Michael. So I'll definitely be watching with interest. All right, Linda just wants to go over oil again. Okay, I'll go over it briefly. We have a little bit of time. Won't take too long. So I've been watching oil. Oil's in a range between, this is West Texas Intermediate, mind you. I'm watching that $54 is major overhead resistance, and right around $48 is the support. So it's in a range. Like many markets right now, they're in a range. They're waiting for something. They're waiting for some sort of a catalyst. It could be tomorrow's GDP report, it could be something related to Europe or Greece, something related to further direction about the upcoming Fed funds rate hikes. They're waiting for something. I don't know precisely what it is, but it's a high probability that it's some of those. So let me just look. Oh, anyway, so back to as far as oil, right now it's just bouncing back and forth between these two levels. I want to see if it's going to break to the upside or to the downside. Of course, I need confirmation in the form of a breakout or breakdown from the U.S. dollar index. George is asking me, am I using MTI 4.0 charting system? I'm actually using NetDania charts just for the sake of these presentations because they also have some of the futures contracts that I look at, but I'm definitely open to using other charting platforms in the future for these webinars. But for now, it's very simple and very easy to use and has a lot of the things I look at, not just Forex. George asks me to look at British pound, Australian dollar. Yeah, let's take a look at that. Okay. See, what I do is I always look at these Forex markets and other financial markets in a general to specific manner. So first of all, I go right to the long-term chart. I want to see what's the big picture. And I'll just mentally draw lines, just lines that seem obvious to me in some way or another that may have some significance, like connecting highs, connecting lows. There's a good chance that that it's trading in some sort of a channel here. And then I would look at prior highs because prior highs often form major support levels or resistance levels. So right over here, it's prior high back in January 2014. And you can see this currency pair bumped its head right there and sold off. So it's got some significance. Plus, it's a round number, 1.92. I always watch those round numbers. Let's go to daily. So now, look, you can see it's consolidating right underneath $2. So I'm watching this consolidation pattern. Could be a little pennant, could be a flag. I want to see if it's going to break out of here or break down. So if you're in the cyber group, I can go over this in more detail, but we'll be starting the closing bell shortly. So stay tuned. Take care.
Hello, ladies and gentlemen. This is Tawill from Cyber Trading University. Want to do a quick audio check? Could everyone hear me loud and clear? Just give me a chat back, please. All right, excellent. All right, so we have Michael Tawill is going to be joining us in about 3 minutes, guys, so just stand by, and we're just going to get a little organized. And like I said, don't go anywhere. We'll be right back. All right, ladies and gentlemen, let's get started. Let me do a quick audio check. Can everyone hear me loud and clear? Just give me a chat back. Thanks. Andy, Keith, Peter, Doug, good to see you guys. Welcome back. This is Closing Bell at Cybertrade University, and we do it every Tuesdays and now Thursdays because more people are enjoying Closing Bell more than ever. And most importantly, we have so many great presenters and educators that have been such great contributors that we basically are running way behind. So we're starting to offer more education for you, bring guys across to do more events and to come do more speakings to help educate you and in the market. So anyway, I wanted to get right into and talk about our new speaker. This is the first time we had him on, but it's not the first time we had MTI, one of the leading online Forex educational schools, I would say, in the world, because there's not too many people I would probably recommend or has a structure of teaching some of the best in the industry, and you could also see them on CNBC, Fox, and CNBC, and Bloomberg, and probably a gazillion other different websites. But they brought in and they wanted to. I wanted to have a new instructor, a new presenter instructor from the MTI to come in, and the person that we have here is Michael Tawill. Now, Michael has been an inspiring educator, been teaching for a very long time. Very fond about listening to his bio as someone that actually came from learning from law school and getting bombarded with all these bills probably, and now he wants to basically say, how am I going to make my money back? And he got into the markets. The thing about the markets, everyone, this is probably the highest paying job in the world without going out there and spending the highest amount of money in education. And you don't have to go to Harvard and and become a trader. You just need to follow and find the right mentors and the right educators. So that's why Mike Tawill is here. So he's going to probably go for about an hour. He's going to close out the meeting. He's going to tell you a little bit more of the techniques and strategies behind the Forex market and how things work for him, and then just like we do here at Cybertrade University, and I can promise you that everyone's going to walk away with not just one but several great tools and benefits of how and the benefits of the Forex market works and what it is. So without further ado, I want to pass the stage over to him. Mike, the stage is all yours.
Great. I really appreciate that introduction there. And one thing that was just mentioned real quick. Actually, before we actually get rolling, let me just make sure once again, can everybody hear me loud and clear? And if you can see my screen that says you're about to discover, can I just get a Y for yes? Let me know that we are good to go. If you could please be so kind to do so. Thanks, Andy. Thanks, Jim, John, Lou, and Donna, Pete, Linda, and everybody else in the room. I appreciate that. One thing that I just heard is, you don't have to go to Harvard and all these fancy schools and, pay 50, 60 grand for this college education to really kind of make it. And that's really what most people are led to believe. And I absolutely 100% agree with that. And what I want to let everybody know, once again, actually thanks for attending. I'm very excited, obviously, to be sharing with all of you. But what I'm going to be helping you discover today is really some incredible, powerful tools, and in particular, the Fibonacci tool, okay, and other simple ways to really increase your profit in the Forex market starting today if you really want to. Now, I'm also going to be discussing something, the next leg of something called the Forex trading prediction, and how this can really help prepare you for upcoming trades in particular, and how these moves can really be used to help jumpstart your trading careers. Now, I will also tell you that the tools, the strategies, and the techniques that I am going to be sharing with you today, they allow me personally to be a consistently profitable Forex trader. And I hope, it's really to empower you today to follow, our step-by-step approach to help you achieve the financial freedom that you not only want, but that you do deserve. Now, the good old disclaimer here, okay? I have to let you know that trading does have its own form of risk involved. So you should never invest money that you can't afford to lose, and always trade with equity management in mind. Now, there is no such thing as an undefeated season, and you may incur losses from time to time, but the key is to keep your profits high and have minimal losses. And I'm sure, I hope a lot of you are aware of that, right? Now, it is highly recommended that you do go through the education in its entirety and begin trading as an educated and knowledgeable trader. So real quick, what I want to do is just lay the foundation for everybody online. And I want you to know that this webinar is really designed for one thing. And that one thing is this. I really want you to see if you truly see yourself doing what I'm going to be doing. Okay? Do you see yourself doing this? And real quick, what we're going to be covering today, I'm going to give you an introduction and a breakdown of who Market Traders Institute is and what we do. Also, I'm going to go ahead and cover some common terms in regards to the Forex market and bring everybody up to speed. And then, of course, number 3, I am going to pull up my charts again and take you through a live market walkthrough, run through Fibonacci's, take you to current market examples. And then finally, I am going to wrap up with the Ultimate Traders Package on Demand, which is the very thing that I've gone through, as well as our other 30,000 clients and students to get us to where we're at today. All right? So at this time, I want to just ask everybody, how many of you have a pen and a piece of paper? Type in a Y for yes if you have your pen, you have your piece of paper, you're ready to rock, because I do want to have you write down 2 things real quick. Okay, perfect. Great job, Lou and Mark, Donna, and Barry, and I really do appreciate the interaction. It's really no fun speaking to a blank chat, so thank you for that. Now, the first thing I want you to write down is Forex trading prediction, okay? And the reason I'm having you write this down is because we've basically been tracking, several currency pairs, but 4 in particular have really stood out to us. And these 4 pairs are basically, there's some major market movement happening right now, both short-term and long-term, and we can expect about $50,000 of opportunity in about a 4-month time frame, and we're expecting about $120,000, of opportunity in a longer time frame. Now, that is based, okay, as if we're trading in a standard account, and I will just discuss that so you know what a standard account is a little bit later, right? But let me ask you this. How many of you would like me to cover these 4 pairs? Just give me a Y for yes if you want me to cover these when I get into my charts a little bit later. I like to kind of cater it to, what a lot of you want to say. Okay, majority vote says yes, then that's the answer, right? Now, basically, our analysts do cover these pairs every single week and basically tell you what to do. And if that's something you want to be a part of, we'll certainly show you how to do so, right? And also, next thing I want to cover is I want you to write down is FXFire System, okay? And this is, yes, we're going to be covering Fibonacci's, but I'm also going to hone in on this. And what this is basically, we've basically developed a system, all right, a little while back, but we've really been doing some back testing on it. And I'm just going to tell you this. If you take a look at the graph of the growth to the right of the screen, you can basically see the growth that's been taking place. Since December of last year, okay, just 2-3 months ago, we basically captured 2,600 pips. Right, at a standard account, that is roughly 26,000 US dollars, and we are going to be actually giving some of these systems away today. And so once again, if you like what you see, you like it, and you want to be one of the ones that get it, I'll show you how you can do so a little bit later, right? So with that being said, let's kind of move on. And I appreciate the introduction earlier, but just to kind of bring everybody up to speed, I want you to know that for the past 7 years, I have been coaching and mentoring individuals on essentials necessary to succeed in the marketplace. I do speak to large organizations and audiences, training them on how to become a results-driven achiever. And for the past 9 months, I've actually been specifically teaching and educating on how to trade the Forex market successfully. And so, I've been working with MTI now for about 9 months. And I want to tell you this. I went to school. I got an education. I got into law school. I did all that. But at the end of the day, type in the word me. If you can find anything better to do with your time, like travel or whatever you love doing, than chasing a dollar bill, And so I want to tell you, a lot of people want to retire. A lot of people just want that secondary source of income, and I, plain and simple, just got sick and tired of being sick and tired of just chasing the dollar bill, running out of money before you run out of months. You know what I mean? And so I just knew I needed a better way, and that's what led me to basically investigate the Forex market. All right. So with that being said, what I want to find out real quick is this. Can you just please be so kind? Type in a number 1 if you know nothing about the Forex market. How many of you know nothing about the Forex market? You're absolutely brand new to this. You're just kind of, you were kind of like me, when I was new. You just don't know anything. Okay, cool. Fernando, Pete, Albert, Marcus, Andy, John, thank you. Now, can you just please be so kind to type in a number 2 if you know a little bit about the market? You're not really, you're not trading live. You know a little bit about the market, but you wouldn't really consider yourself a trader yet. Okay, thank you, Donna. Thank you, Danny and Raja, John, Matthew, Barry, Lon, and everybody else. And then finally, last thing, can you please type in a number 3 if you're currently trading the market in any way, shape, or form, okay? Whether it's live, whether it's demo, it doesn't matter. Just to give me an idea. Okay, Thomas, Mark, Louis, Marcus, Pete, Fernando, and everybody else typing that in. Okay, cool. So basically, I want to tell you right now that if you're struggling in the market, it's a zero-sum game. All right, the losers pay the winners, and you're basically paying the experience. And so the beauty about the market that I absolutely love is that you only have to learn how to trade it successfully. You have to learn how to trade it one time. And once you learn how to hone your skill one time, you basically have that skill for the rest of your life. And that's the beauty about the market, okay? So who is MTI and what do we actually do? Well, MTI stands for Market Traders Institute. Now, they are the first and the oldest Forex trading institute on the planet, and they have been in existence since February of 1994, and we're based out of Lake Mary, Florida. And if you're not familiar with Florida, I'll just tell you this: it's about 20 minutes from Disney World. So they are the largest Forex educator as far as actual support infrastructure in the Forex market. And I'll tell you this: that one unique distinguisher is that through their continued education program, they're actually the only company of its type that's actually approved to teach courses in major universities. And one thing I'll tell you is this: one thing I'm big on is credibility. Okay, and I'm not a man of gimmicks or jokes. I like longevity. Okay, I want results. I want facts. And so one thing I'll tell you is companies don't stick around for over 20 years if they don't know what they're doing. Right? Now, one thing that we stand on here is that we never leave a client behind. So regardless of your actual learning curve, that's the one thing we stand on. Now, you notice that it says investing in our students. Investing in our students since 2014 of last year. Sorry, I was actually reading a chat while I was trying to read this. So anyways, but the reason I have that is because we are an institute, of course. Last year, we actually did invest into our students $2,482,462 and in over 89,000 resource hours. Okay, so if you know anything about, a lot of companies, they just want to offer you, basically a product or whatever and say, hey, good luck. Well, we're almost like a university, and that's pretty big. And that's why I like to touch on that. Now, this whole philosophy, okay, it all came from the CEO and the founder of MTI, Jared Martinez, and he's known around the world as the FX Chief. Now, he has been trading the market for over 25 years, and he simply wished he had a mentor early on in his career. He knows what it was like to be brand new and it's frustrating at times, And he has written over 20 books, and some top sellers are 10 Essentials of Forex Trading, Forex Mindset, just to name a few. He's been seen on Fox, MSNBC, Bloomberg, and many others. And also, for those of you that would like the opportunity to spend some time with him, I will show you how you can do so a little bit later on in the presentation as well, okay? Now, one more thing that I want to cover real quick about MTI before we take a deep dive into some, Forex, if you will, information. I want you to pay very close attention to this. All right? Every quarter, brokers, they have to request profitability information from their traders. Well, last quarter, MTI did the same exact thing for all of our students, and the results are very, very clear. Okay, MTI Forex traders are 77% more profitable than the average trader out there. Okay, and the proof is in the number, folks. So once again, if you're all about credibility like I am, that's one thing that kind of stood out to me, when I was learning about MTI and what they have to offer. So as to not waste your time today, okay, because we only have a very short amount of time, and that's why I apologize if I'm speaking a little bit quickly here. And I just want you to know that we have about an hour, so I'm trying to get through some of the things here. So, but my promise to you is this: okay, by the end of this presentation, you will understand the potential in the Forex market, and you will understand how you can have immediate profit potential in the market without quitting what you're doing full time. Okay, so I want you to know that this presentation is not about being a millionaire, although it is possible, but there's no such thing as an overnight success. Okay, so when I go through the market, I want you to imagine yourself doing what I'm showing you. Okay, I want you to imagine yourself, making money from the comfort of your own home, and I want you to imagine yourself setting a trade in the morning, letting it ride during the day, then revisiting the market later that night with profit. All right? And finally, last thing here is I want you to imagine being in complete control of your financial situation, regardless of what's going on around the world. All right? So with that being said, what is the Forex market? Well, the Forex market is one of the fastest growing markets, financial markets, if you will, on the planet. There's about, last time I checked the stats, there's about 125,000 retail accounts opening up on a monthly basis. Now let's talk about liquidity. Okay, you can enter and exit into the market whenever you want. There's always buyers and there's always sellers. Now flexibility. Okay, it's open 24 hours a day, 5.5 days a week, and it's also the largest market. There's over $5 trillion traded daily on the Forex market, and that's about 30 to 40 times larger than the U.S. stock market, just to kind of give you perspective. Right? And we as individuals actually make up about 2% of the market. Okay, and when people say, Mike, what does the market mean to you personally? To me, it's the easiest, the most predictable, and the safest way to invest. Now, one of the great things, okay, one of the most important things, shall I say, about the market is that it allows you to focus, okay, because understand that less is better. So whether you're a busy professional, you have other things you need to do during the day, okay, you don't have to be spending 30 to 40 hours a week analyzing charts, and that was my biggest concern. Can any of you relate? Was any of your concerns out there that, hey, I don't know if I have the time? And if that's you, understand that I was there, okay? And that's the beauty about the market, is that you don't have to spend that much time analyzing the charts, all right? So what I'm going to do right now is this. I'm going to take just a few minutes to explain, just a few things, some fundamentals, if you will. And I want you to know that the Forex market can be summed up by answering two very fundamental basic questions. The first is, what are you doing when trading Forex currencies? And the second is, what are pips and why do you actually want them? All right? So if you know this information, great. And if you don't, you're going to want to pay pretty close attention here, all right? So with that being said, can I just please get a Y for yes if you all see my charts up on your screen? Just let me know that we are good to go here so I'm not going over this to myself. All right, thanks Keith and Fernando and Thomas, Jadwiga and Lou, Mark, Donna, Barry, and everybody else. Okay, sweet. So with that being said, let me just pull up the Australian Japanese yen, okay? Now, I'm going to show you real quick how to read the charts. Now, if you notice, if you look at the top left-hand side of your screen, if you take a look at my spotlight, okay, on the top left-hand side of my screen, you're going to notice you have AUDJPY. That is where we're going to be able to notice the currency pairs that you're trading, okay? So right now, we are trading the Australian against the Japanese yen. Now, one of the things that I want you to understand as far as how this market moves is the market moves in what you call a wave-like pattern, okay, where the market will create highs and the market will create lows. And that's the beauty about the market, folks, is that the market is a very repeatable process. It does the same things over and over and over and over again, And so once again, the question is, how do you capitalize on that, all right? And how do you know, when the market's making highs or when the market's making lows? Now, to show you a little bit more about how to actually read the market here, let me just go ahead and zoom in. Now, when you notice, how many of you noticed the market right here? Okay, you notice that the market is actually going down. You see that? Well, when the market is going in a downtrend, right, that is called a bear market, okay, or a bearish market. People sometimes also refer to it as shorting the market. Now, when the market is going up, like right here, understand that that is a bull market or bullish market, all right, and people often refer to that as going long, all right. Now, you can also trade both directions, all right, buying or selling 24 hours a day and on any time frame. Now, what I want you to also notice real quick is that how many of you notice right here, all right, the market is going down, all right? This is not the live market, but how many of you see this, okay? So what I want you to understand is that when the market is going down, the Australian dollar is losing value against the Japanese yen, and when the market is going up, okay, the Australian is gaining value against the Japanese yen, all right? Does that make sense? Give me a Y for yes if that makes sense so far. All right, perfect. Now, let me back up real quick, and let me just show you how to actually read the Japanese candlesticks. And once again, for those of you that know this information, I do appreciate you giving me some grace here as I do kind of bring everybody up to speed, all right? So, oops, let me bring my charts back up. All right, there we go. All right, so once again, I'm going to go ahead and just highlight these two candles right here, and let me just kind of show you and explain to you how to actually read these. So, notice that you have dark blue candles and you have white candles. Well, dark blue candles, okay, represent that the market is going down, okay? But when you have a white candle, the white candle represents that the market has basically fluctuated or gone up. All right. Now, Japanese candlesticks, these rectangular shapes, understand that they're visual representations of how much the market moved in whatever time frame you select. Now, they can be represented in 5-minute increments, 1 hour, 2 hours, 1 day, 1 month, whichever you prefer. But the ones on my screen just so happen to be a 1 hour time frame. Okay. Now, when the new hour forms, what I want you to know is that when the new hour forms, okay, let me back this up real quick. I apologize for the fast movement there. Okay, the candle will look very similar to this, okay, the one that is highlighted right here. And basically, within that hour, it's gonna basically grow, moving up or down, okay, depending on market movement. But that will form the actual candle. Now, if you take a look at the dark blue candles, you take a look at the white candles. All right, let me just use these two as an example. White candles will have an official close at the top of the candle, okay? And the dark blue candles will have an official close at the bottom of the candle. All right? Now, with that being said, I want to let you know that the market will basically form something known as candlestick formations. And I'm going to touch on that in the live market a little bit. But these help us determine entry points and basically let us know, hey, is the market making highs or is the market making lows? Make sense? All right. So with that being said, let me go ahead and explain to you, what are we trying to accomplish in this market? Well, our number one goal in this market is to capture something known as pips. So if you're taking notes, I'm going to write this down for you. So our goal is to capture pips. Okay, now PIP is an acronym, and it stands for price interest point. Okay, now, one more thing that I want to tell you is that basically what does a pip equate to? Well, a pip, so I'm going to put 1 pip, okay, equates to 1/100th of a penny. So just like, just like a penny represents 1/100th of a dollar, okay, 1 pip represents 1/100th of a penny. Does that make sense? All right, and let me go ahead and increase the font a little bit so that everybody can see that a little bit better. All right, there we go. Cool. Now, let me go ahead and explain to you and show you how do we actually measure pips. Well, let's just say we decide to get into the market right here at the close of this candle, okay? And let's just say we decide to stay into the, and we stay in the trade, and let's just say we exit at this white candle right here, okay? Right here, the close of that candle. Well, I'm going to click my BI tool, and this measures pips. So if we get into the market right here, we get out right here, okay? How many of you can tell me how many pips did we just basically generate? How many of you can tell me if you know? And if you don't, I'll show you where I'm looking. All right, so how many of you see the number 81 on the top left-hand side of my screen here? You see that? Next to the word range? You see that? Okay. Yeah, give me an 81 if you see that, just to make sure that everybody sees where I'm looking. Okay, perfect. Now, thank you, Mark, Naja, and everybody else. So range equals pips. You want to keep that in mind, all right? So once again, that is basically how we read the market. That's a little breakdown on Japanese candlesticks and pips. So let me ask you this. Is everybody with me so far? Give me a yes if that makes sense so we can move on, and I want to show you some other information. I just want to make sure everyone's good to go. Okay, perfect. Thank you for that clarification. Now, I also want you to write down one more thing, okay? In this market, money is made by trading something called a lot. And a lot essentially refers to the monetary size of the trade that you're actually making. Now, I'm going to discuss 2 lot sizes, okay? There's mini lots and then there's standard lots. Now, a mini lot is a $200 investment, and that controls $10,000 of a currency. A standard lot is a $2,000 investment, and that controls $100,000 of a currency. There's something known as leverage. Now, when you trade a mini lot, each pip is worth $1. And when you're trading a standard lot, each pip is worth $10. Okay? So with that being said, let's go ahead and let's get right into things. And so what I'm going to do is I'm going to pull up my charts real quick once again, and let's get right into the strategy and show you exactly how everything holds true, all right? So let me just clean up the charts real quick, and all right, let's get right into things. So with that being said, first thing I want you to understand is what is Fibonacci? Well, understand that Fibonacci is basically, it's a mathematical equation. And what it does is it basically hones in on reoccurrences, and it hones in on patterns. And it's basically the actual definition, okay, is, let's see, yes, the natural governing law of nature, okay? And so with that being said, understand that not only is Fibonacci found in, architectural design, plastic surgery, farmers use it to breed plants and animals, it's in art, but we actually use it here in the investment world as well. Now, the very first thing that I want you to understand is that if you want to absolutely dominate the market, there's really only 3 things that you want to master. So I'm going to put 3. Actually, let me just type them out. Okay, so 1, the first thing you want to know is where is the market going? Number 2 is where do I get in? And number 3 is where do I get out? Okay, so that's it. Those are the 3 things that you want to master. And once you master these 3 questions, the market's all yours, okay? So first things first, where's the market going? Well, let's find out. So what I'm going to do is I'm going to just compress the chart a little bit. All right, so first things first is I'm going to draw something known as a counter trend line. Now, this counter trend line, let me just go ahead and draw this out, and then I'll explain it to you. Okay, so how many of you notice, how many of you see the market? Okay, we can clearly tell and identify that we're in a downtrend. Now, notice the market comes up, and the market hits my orange line. You see that? But it doesn't go through it. The market rallies down, it rallies back up, it hits my orange line, my counter trend line, and it rallies back down. You see that? But notice that the market hasn't broken through yet. But the moment the market breaks my counter trend line, that is now my indicator that the market will likely start going into an uptrend. So let me ask you a question. Does the market break my counter trend line, yes or yes? How many of you see that? So now I can properly go, okay, I believe the market is now going to go in an uptrend, so I'm now going to trade, okay, going in that direction. I will tell you right now, the biggest problem an issue. Great, Mark. Thanks for the heads up, buddy. One of the biggest problems that traders face, okay, and I'm going to tell you right now, is that, yeah, Ron, that's true as well, buddy, and we'll talk about that. But one of the biggest things that traders face, investors face, is that they don't know what is a short-term move and what's a long-term move. Does that make sense? And so they don't know, okay, is the market going in this direction? Is it a short-term move? Is it a long-term move? And what I mean by that will make more sense when I actually show you how Fibonacci's works, all right? So first things first, our number one thing that we want to do is we want to identify a proper low, and we want to identify a proper high, okay? And the reason I'm telling you this is because now that we're what I've identified is that we're now going in an uptrend, all right? It broke my counter trend line. First things first is we want to identify a proper low, and how do we do that? Well, let me ask you a question. Take a look at this candle right here. Do we have two candles to the left and two candles to the right that are higher than our center wick low? How many of you see that? Okay, do we have that? Yes, we do, right? Well, that is how you identify a proper low. Now, the way we identify a proper high is the same thing, but in the opposite direction. We're looking for two candles to the left and two candles to the right lower than my center wick high. Now, do we have two candles to the left and two to the right that are lower than this center wick high? Yes or yes, right? So that is first and foremost the Fibonacci's. That's the first thing we want to identify. Proper low and proper high. Now, what I'm going to label these as, I'm going to call this my A and my B. A, B. Why do we do that? Because this is known as my AB boundary. Now, once I have an AB boundary identified, I am now going to click my Fibonacci tool. I'm going to use my magnet tool as well, and I'm going to measure from my A to my B. And the moment we release, I want you to notice that we have a series of horizontal lines and colors. We have red, green, blue. You don't have to memorize all these numbers, don't worry, okay? But what you do have to know is that red goes with red, blue goes with blue, and green goes with green. Does that make sense? All right, so remember how I told you before that the market moves in waves? Okay, the market's going to form highs, the market's going to form lows. Market's going to make lows, it's going to make highs, it's going to do this all day long, right? What goes down must come up, what goes up must come down. Well, let me ask you this. If the market has formed a high, is it fair to say that the market's going to form a low? Absolutely, right? So if the market, let me give you a little test here, and then we're gonna show you how this all holds true. But if the market forms a low, and let's just say the market retracement means the market goes down. So if the market retraces to my 382, my 50, or my 618, they're all red. How many of you can tell me where can I expect the market to extend back up to? Bingo. Absolutely, right? Red goes with red. Now, if the market is to retrace down to my 786 or my blue, where can I expect the market to extend to? How many of you can tell me? Blue, right? And then finally, if the market retraces down to the green, you guys already probably know what I'm going to do. Green goes with green, right? All right, give me a Y for yes if that makes sense. I know it's very 101, okay, it's very elementary, but it doesn't matter, okay? It's once again, it's all about do you believe you can do this, okay? So let me just clean this up real quick, and let's just show you how this holds true. So what I'm looking for right now is I am looking for my entry point, okay, will be, I'm looking for deepest point in retracement, okay? This is what I'm looking for to get into the market. So once I have all this set up, I'm now going to wait for the market to take its course, do its thing, okay? And you could technically get in at this white candle, but once again, I'm going to look for the market to drop a little bit lower, and let me ask you this. Does the market indeed come back down and hit my 382? How many of you see that? Okay, so this right here, I will call my entry point, okay? So with that being said, there you go, right? So with that being said, this is now where I'm going to go ahead and enter into the market buying. Now, for those of you that are wondering, well, what about your stop? Well, I'm going to place my stop 10 pips below my entry point. So let me go ahead and put my stop on there. So if you notice that we're at the 92.73, let's drop it down 10 pips right there, okay? So once again, my stop will be minus 10 pips below my entry point, okay? Now, where's my reward going to be? If red goes with red, it's going to be at the 618, right? So once again, I want you to understand that this right here, let's just take a look at something. How many of you can tell me how many pips would this equate to? How many of you can tell me? Bingo. Great job, Mark. Great job, Fernando, and everybody else. 137 pips, okay? So our target, our reward, okay, so I'm going to put here, I'm going to put target/reward, okay? So once again, if I can spell today, I'm just kidding. All right, there we go. So 137 pips. So plus 137 pips, or, well, actually, let me just put potential, okay? So we're going after 137 pips potential. All right, now, how many pips are we risking here? Our stop is minus 10 pips, right? Type in, how many of you agree with me? Is this a pretty good risk to reward ratio? Risking 10 pips to gain 137, yes or yes? Okay, and this goes on for me to tell you, look, people that, you know, I had a gentleman who's like, Mike, look, man, I've been trading for 20-something years, and you know, you're this 28-year-old kid. Let me tell you something. I'm like, okay, you know, I'm open ears, right? The day you think you know it all is the day you're going backwards. I'm like, all right, let me hear it, okay? He goes, it's all about having more wins than losses. And I'm like, well, okay, can I give you my input? Okay, and I didn't show him this example, but let me ask you, do you all agree that even if you have, you know, more losses, are you still coming out with net profit if you have this risk to reward ratio? And the answer is yes. And so you really only need a couple of good trades that are going to honestly catapult you in the direction that you want to be in. Now, I will tell you that if you're only winning 20% of the time, you might want to change your strategy. But all right, so with that being said, let's move here, okay? So look, you're in the market, you're living your life, okay? You're doing your thing. And remember, I want you to understand, folks. All right, what do we do here? We found our entry point, we found our stop, we found our reward, okay? So you now set it and forget it. You're out living your life, okay? You're going out on your way, okay? You're going to live your life because you already set this up on your broker platform. And look, when the market hits your reward or hits your stop, it's going to take you out. Now, it comes very close to my reward, but it doesn't quite hit it yet. And look, don't stress yourself out. You know, market's going up 10 pips, down 30 pips, up 20 pips. You know, a lot of people do, what they do is they get on this emotional roller coaster and kind of freak themselves out, and they stare at their charts all day long. You know, I'm telling you, that's not a safe strategy. You know, you have a life to live, a job to do, kids to raise, a spouse to travel with, you know, work to attend to, things to do. But let me ask you this. Does the market eventually, inevitably, hit our target, yes or yes? How many of you see that, okay? So our 137 pip potential is now an actual reward. So this 137 pips is now going to equate to $1,370 US profit, okay, in 3.5 days. And by the way, the reason I'm saying 1,370 is because I'm using the end goal in mind, which is a standard lot, okay? And I'm not talking about, you know, broker fees and all that, okay? I mean, we'd be here for days if we got that technical, okay? So just give me some grace here, right? So with that being said, how many of y'all would yeah, so for those of y'all that are in the South, you can relate, y'all, right? So how many of y'all would be pretty happy if you were able to generate this type of profit in 3.5 days? You know, would you be pretty happy, and would you be pretty satisfied about that? You know? And yeah, exactly, right? So I see a lot of you saying yes, absolutely. And you know, I have one person say, let me think about it. Well, hey, no problem, okay? But once again, how many of you like what I'm showing you, and how many of you can you say that this is starting to make sense? You know, am I explaining this in a manner where you're kind of getting it? You know? And so understand that, once again, as the market rallies until it hits your target, that is the phase where people don't know short-term move or long-term move, okay? And so with that being said, we're going to go ahead and move on to the next example. Now, what do we do? What do we do now? Well, we're going to go ahead and we have to set up our new AB boundary. So how do we do that? Well, first things first is, how many of you see right here, deepest point in retracement, which is right here? You see that? Well, the deepest point in retracement will be your new A, okay? That will be your new A. Now, where the market hit your target, which was right here, what we're looking for is 2 candles to the left and 2 to the right lower than our center wick high. Do we have a proper high right here at this candle? Type in a yes if you agree that that is a proper high, okay? So once you have your new AB boundary identified, guess what? It's game on, okay? We're going to go back to the fibs. We're going to redraw this bad boy, and we're going to go from our A to our B, and we're going to let go. And there it is, new set of Fibonacci's. Now, one of the great things, okay, well, let me ask you this. How many of you would like even more confirmation than just what I'm showing you? How many of you would like to have even more confirmation? Give me a Y for yes if that's you. Okay, a lot of you are saying yes. And here's why I'm asking you that question, is because what I'm going to show you right now, okay, this is actually proprietary to MTI. This is called our Pro Traders Checklist. And what we do is this. We're going to basically, we have multiple different checklists we can use, but we're in an uptrend ABCD, okay? We're on the Australian Japanese yen 1 hour time frame. We're going to input right here, okay, our projected extension price, as well as for Fibonacci. We're going to go down here and it's a checklist. Did you do this? Did you do that? Yep. Did you do this? Yes, 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 yes. So you make sure you don't miss anything. Then you grade your trade. Are the candles in the up AB boundary? Yes, 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 yes. No. Evaluate grade, 85%. Now, how many of you, excuse me, how many of you believe that this is the ultimate confidence in what you're doing? You know, is this helpful for you? If you saw an 85% likelihood of a trade, would you take the trade on top of your strategy that you already trust in? Okay? And so once again, there's multiple ways for confirmation, but I'll tell you this, I absolutely love this tool right here, and once again, a lot of you will be able to have this in your hands today as well, okay? So with that being said, let's keep moving here. AB, excuse me, we're waiting for the market to do what? We're waiting for the market to retrace, because we already know it's going to, okay? Market retraces. How many of you would get into the market right now? Type in yes if you would get into the market right now. Yeah, a lot of you are saying yes. Okay, so we get into the market right here, and green goes with green. All right, so once again, you're in the trade. I'm not going to draw out my stop and all that, but once again, don't forget that your stop, your reward and all that. Okay, so I'm not, I was going to type out buy here, but once again, you're living your life, you're doing your thing, you're back to living life. Okay, but how many of you like this? How many of you are understanding kind of what I'm doing here? And how many of you believe that this is a strategy that even if you don't understand 100% of it, how many of you believe that this would basically, it would really allow you to maximize your profits, all right, on uptrends and downtrends? And that's the biggest thing that traders have trouble with, from what I've learned, is that they gain profits, but they want to maximize their profits. And this allows you to basically disregard all of this movement here and kind of sit there in anxiety and fear of what's happening because you understand Fibonacci's. Now, do we hit our target? Yes or yes? And not only do we hit our target, but does the target, once we hit the target, does it form a new proper high right out of the gate? You see that? 2 to the left, 2 to the right, lower than my center of high. Okay, so once again, not only am I going to take my profits, but now I also have another proper AV setup. So how many pips did we generate on this one trade? How many of you can tell me? Excuse me there. Yeah, great job, Ron. Okay, so once again, take a look at that. All right, in 5 days, we're up 186 pips. How many of you would be pretty happy and ecstatic if you were able to generate 186 pips or $1,860 US profit in 5 days? How many of y'all would be pretty happy about that? Would it suffice to say that that would really allow you to start maybe, accomplishing a lot of the things that you want to accomplish? And so once again, my next question to you is this, all right? How many of you see yourself doing this? Like, truthfully, how many of you see yourself using Fibonacci's based on what I'm showing you, as far as even your liking to them? Awesome. A lot of your, yeah, Mark and another Mark and Fernando and Capono and everybody else typing in yes. Awesome to hear, okay? So once again, let's form our new AB boundary. Deepest point in retracement now becomes my new A, okay? And guess what becomes my new B? Remember where we hit our target? Right there. 2 candles to the left, 2 to the right, lower than my center wick high, and I now have my new B right there, okay? So what are we going to do now? Same thing. Are you all starting to understand and recognize how repeatable this is? It just repeats itself over and over and over again. So A to B, okay, A to B, we're going to wait for it to retrace, we're going to have a target. And I'm telling you folks, when I had options like, hey, do I want to commit myself to a courthouse and practice law my whole life, or do I want to, do this, or would I rather do that, or do I just want to surf and travel and enjoy my life and learn how to trade? Once again, it became very clear to me what I wanted to do. But take a look at this. How predictable can you ask for it to be? And so once again, take a look at this entry point right here. Okay, red goes with red. And remember, the market doesn't have to drop to the actual red. Anywhere between, even if it's above the 382 extension, understand that that's still considered red. Okay, so the market it really depends. Is the market moving, making highs and lows slowly, or is it making higher highs and higher lows slowly, or higher highs and higher lows much faster? It makes sense? And so once again, you're out living your life, doing your thing, and all you're waiting for is the market to take its course, do its thing, and eventually, boom, you hit your target. Is this starting to make sense? So with that being said, how many of y'all can tell me how many pips did we generate on this one trade? If you got into this trade, how many of y'all can tell me? We are up 144 pips. Yeah, absolutely. Ron, I'm going to actually mention what Ron just said, okay? So 144 pips in 2 days. Y'all see that? So 144 pips in 2 days. 144 pips, or $1,440 profit in 2 days. Now, what Ron's saying, Ron is saying, yeah, but don't you got to watch out for the lower lows and retracement? Don't you? Yeah, absolutely. So look, if you're taking notes, I want you to remember this one thing that I'm about to tell you, okay? As long as the market, okay, does not take out the A, the market has no choice but to go your way, okay? So understand that as long as the market does not take out your A, it has no choice but to go your way. Make sense? So if we go ahead and just do the math real quick, all right, I'm going to pull out my calculator so we can do this together. So 3 trades were at 1,440 plus 1,860 plus 1,370, we're at $4,670 US dollars. Now, let's go ahead and add this up real quick. So we're up 467 pips, okay, or $4,670 US dollars profit, okay, and let's see here, that took 5, 8.5, 10.5 days, and 10.5 days. Type in a Y for yes, please, if you would be pretty happy generating this type of profit and that type of time frame. How many of y'all be pretty happy about that? And how many of you see yourself really applying this method? So once again, this can be utilized on any time frame, any currency pair. And what I want to do right now is this. A lot of times people often ask me, let me see how I'm doing on time real quick. Let me just check something real quick. Okay, cool. We're doing good on time here. Now, so one thing I want to do is I want to show you how does this actually work on a downtrend. So this works on an uptrend as well as a downtrend. Now, this is the euro, Japanese yen on a 60-minute time frame. Now, same thing. I already went through this for the sake of time, but do we have an A and a B? Okay, we're doing the same thing, but we're basically going in a downtrend now. A, B, extend our Fibonacci's in the opposite direction. Okay, the market will extend up. It forms a dark cloud formation. We're going to sell the market. So we know red goes with red. We have a target at the orange. Does the market hit our target? Yes or yes? That's 166 pips or 1,660 US dollars in just 1 day. Okay, same thing. A to B, extend our Fibonacci's. Market goes up. Okay, creates an engulfing bearish formation. That's worth the red. Our target is now at the red. Oops, sorry about that. Okay, so if our target's at the red, what are we waiting for? We're waiting for the market to basically rally down and it hits our target. Are y'all starting to see this? That's 272 pips or 2,720 US dollars in 6 days. And so once again, how many of y'all are starting to see the pattern here? It's almost like it's funny. It's like A to B, market's going to go up, then you're going to have a target. A to B, it's just, once again, A to B, market goes up, you have a tweezer top formation. We're going to wait for the market to hit our target, which is at the red. Red goes with red. Now notice that we're in the holiday season right now, okay? This is back in December, all right? It kind of flattens out, but we hit the new year. Market ultimately takes its course, hits our target, 390 pips, or 3,900 US dollars. A to B, same thing. I could do this all day long, folks, all day long. And take a look at this downtrend, okay? A to B, 346 pips, or 3,460 US dollars profit. Another one, 329 pips, or $3,290 profit, 510 pips, and finally, this takes us to current market, okay? Now, if you notice that basically the market's, we're now actually in a slight uptrend, but how many of you see how we took advantage of this downtrend? Do y'all see that? Make sense? So how many of y'all would like to take advantage of the markets going up and going down in this manner without looking at every candle kind of going, oh my gosh, what is happening? You know what I mean? And so once again, with that being said, I'm not going to do the math here for the sake of time, but let's just put it this way, okay? That's over $15,000 profit, okay, since December 7th. All right, so once again, would it suffice to say that this would meet your goals and this would be a pretty good start for you, okay? And that's really the question you have to ask yourself, and that's why I'm so big on the question, do you see yourself doing this, all right? So look, we got to keep moving here, okay? I'm looking at the time, and I don't want to go over my time, and so what I want to do right now is I'm going to quickly show you the FXFire and how this actually holds true, all right? Now, the FXFire, real quick, I'm going to skip over something real quick. All right, so take a look real quick. I want you to understand what the FXFire system does is this. All right, we've performed back-tested results and since 2011, but once again, over 2,600 pips since December, okay, of just last year, 2-3 months ago. All right, that's 26,000 US dollars. Now, you can set this up, all right, wherever you want it to auto trade, so you can have it auto trade for you. You can also set it up so that it sends you text message alerts straight to your phone every time it hits a buy or a sell, or it's time to exit your positions to take your profit, okay? Now, to explain this and show you how this actually holds true, excuse me, let me go ahead and pull this up and show you real quick. Now, how many of y'all see right here? How many of y'all see that we have a red arrow? Y'all see this red arrow right here? So when the red arrow appears, okay, the red arrow is going to be your signal to get into the market selling. You're going to sell the market, and then it's going to give you a green signal. Now, the green signal will be get out, take your profits, reverse your position. Now you're buying. It hits red, okay, take your profits, reverse your position, get out on green, take your profits, reverse your position, get out on red, take your profits, reverse your position. Is this making sense? All right, so what I want to do right now to almost show you how predictable even Fibonacci's are, check this out, all right? So what I'm going to do real quick, excuse me, is let me just quickly show you something. All right, so what I want to show you right now, all right, let me just actually advance the market forward real quick, and okay, let's just go right here. All right, how many of y'all see right here, does the market form a proper low? Yes or yes? How many of y'all see that right here? So the market forms a proper low right there, okay? Then the market forms a proper high right here, right? So if we extend our Fibonacci's, and I'm basically showing you something to kind of give you perspective on something real quick. If we extend our Fibonacci's from our A to our B, let me ask you this. Does the market, okay, give you a green indicator to buy right here? How many of y'all see this green indicator right there? How many of y'all see that, okay? So it's telling you where to get in. Now, where's your target going to be? Your target would essentially be at the red, right? Red goes with red. Well, did we hit our target, yes or yes? Y'all see that? So that trade, that would have been, okay, about 370 pips. Now, let's just take it out one more. We form a low, we have a high. Let's extend our Fibonacci's from our low to our high, and check this out, okay? Take a look here. Does the market give you a green arrow to basically get into the market and buy? How many of y'all see that green arrow right there? Well, let me ask you this. Does the market hit your target, yes or yes? Okay? And you know what? Do you know why I'm showing you that? Okay, yeah, John, I'm glad you mentioned that, okay? I'm going to tell you guys right now that depending on market conditions, that will depend highly on where I set my stop. So my stop will not always be 10 pips below. It honestly depends on market conditions, and our education covers why and what and how and where. But once again, okay, what I want you to understand real quick is do y'all just see the consistency here as far as Fibonacci's goes? All right, and how it correlates with the system. Y'all see that? So let's just say you want to trade the system without Fibonacci's, without any of that, okay? And that's no problem, all right? But let's just say you want to basically trade the system in its own right. You don't care about Fibonacci's. You don't want to do anything. You just want to trade the system, and that's no problem, all right? So with that being said, let's just go ahead and, I don't know, let's just start right here, okay? All right, now, excuse me. All right, so real quickly, how many of y'all can tell me what would you do right here on this? Let me back this up. How many of y'all see this red indicator right here? Y'all see that? So you would get into the market, selling the market, 2 hours into the trade. Do you have a green arrow? Yes or yes? How many pips would that have been right there? That would have been 104 pip win. So we're up 104 pips. Now, what are we going to do? We're going to reverse our position. All right, we're now buying the market. We're going to buy the market, buying the market, and there it is, red indicator. In real life, in real time, you would have got a text message sent straight to your phone telling you exactly what you need to do. Right there, we're up 75 pips in about, what, 7-8 hours? So 75 pips. How many of y'all, type in a Y for yes if y'all are liking what I'm showing you. How many of you not only understand this, but how many of you like this? You know? And so once again, if you're selling the market, you have a green arrow. It tells you to get out. Right there, 81 pips. Now, I want you all to know as well that one thing that we offer is we actually have classes on everything that we have. So we literally have a class that teaches you how to use this, how to apply the stops, how to apply everything you need to apply, all right, to trade it successfully. And you know, a lot of this stuff, honestly, I'm telling you right now, because I'm so short on time, is I'm literally kind of, you know, just kind of going through this pretty quickly, just kind of showing you the concept of how everything works, all right? And that's why I'm not really getting into a lot of technicalities right now, but how many pips is this? 268 pips. You see that? And so once again, no, Ringgold's, the stop wouldn't be that. Okay, so once again, 268 pips, and how many of y'all, once again, would be pretty happy if you were able to generate that trade as well, okay? How many of y'all are starting to see this? Is this starting to make sense? And so one thing I want you to understand, right, is that with this, folks, understand that, you know, it's not about, you know, can I learn everything overnight? Make sense? So even if it takes you a little while to learn, how many of you would like to have a way to trade the market successfully where you don't have to necessarily, you know, rely and wait on how to master the market, you know? And so once again, for those of you that want to get into the market and trade it right out of the gate, all right, this is something that really kind of allows you to do so. And take a look here. Once again, and by the way, this market, this system works, honestly, it works best on very just volatile markets where it's just moving very, very fast. So once again, up 78 pips, okay? So how many of y'all understand it? You get it, makes sense, good to go, all right? So if we do the math on this, once again, and we kind of put everything together, let's take a look. We're up 268 pips, plus 81 pips, plus 75 pips, plus 104 pips, plus 78. We're at 606 pips. So 606 pips, or 6,060 US dollars profit, okay, and that was in about less, that was in less than 2 weeks. Let's put in 2 weeks. That was less than 2 weeks, right? But how many of y'all would be pretty happy with this? Give me a Y for yes if you would be pretty happy, okay, if you were able to generate this type of profit. And once again, you know, if you take a look at the back-tested results, folks, all right, you know, the proof is in the pudding, 2,600 pips since December, okay? But the question is, once again, do you see yourself doing this, all right? So with that being said, how many of you are now a believer of this? You get it, you like it, makes sense, and you now truly see yourself trading. You know, did I teach you something today? Let me ask you that question. How many of you learned something today with Fibonacci's, FXFire, and you're going to walk away a winner either way because you know that you learned something, okay? Now, I like it here. A lot of you are asking me, okay, hey, how can I get my hands on this? You know, how can I be one of the ones that gets the system? Well, let's get right into it, okay? So we already discussed this. Okay, we discussed Forex trading prediction, and I was going to cover that, folks, but unfortunately, I only have about 8 minutes left. Okay, and I really don't want to, basically, rush through everything in 30 seconds. So what I want you to understand is that right now with our Forex trading prediction, we're literally up, okay, over 1,800 pips in open positions. That's 18,000 US dollars at a standard lot position. And so what I want you to realize, a lot of people often ask, what's the average goal, for your students? Well, on average, your goal is 20 pips per day, okay? And with the days you can trade in a month, that's basically 400 pips per month. Now, 400 pips per month times one mini lot, that's $400 a month, okay, if you're trading a mini lot. Okay, is that life-changing? Maybe not, but is it a good start? Is it better than losing? How many of you agree that's a pretty good start? Now, let's say you're at 400 pips a month, you're at one standard lot, you're trading one standard lot, you're at 4,000 a month. Is this life-changing? And would this really allow you to start, allow you to do some pretty incredible things? And then 400 pips a month, let's say you work your way to two standard lots. Well, folks, that's $8,000 a month. Now, let me ask you, is this truly life-changing? How many of y'all will be pretty happy with generating that type of income? So with that being said, what I want to show you real quickly here, I want to spend no more than literally just, a minute or less on this, is that a lot of people, often ask me, Mike, that's great and all, but how many people really, succeed using a lot of this? Well, let me show you something, okay? I recommend you check us out. If you go to our Facebook page, it's just Market Traders Institute, and you can actually see here that we have over 37,000 likes. But let's take a look. All right, this is Jason Stewart. This was on February 24th. He says, second day of the week with open positions, 232 pips. How many of y'all would like to be up 2,320 US dollars on a Tuesday? Okay, and once again, let's keep moving here. Jason again. Here's Ibrahim, says, Dear MTI, with the Forex prediction from January 19th to February 19th, I was able to bag in 747 pips and 551 pips. Okay, that's literally, folks, over 12,000 pips, or, and the question is, once again, do you believe, how many of y'all would like to have that kind of success? Okay, Jason Stewart, with a loss and a win, was still able to net profit 119 pips, brings my total to this week 471 pips. Pretty cool, right? And once again, I can go on. Here's another 98 pips, all right, and another 98 pips, and once again, 352 pips in 7 days. Okay, that's Jason Stewart once again. And here's Bobby Scott. He says, thanks to MTI and Chris Pulver for helping me, and so many others. Here's my reward to myself for having my first 1,500 pip week. Got a new car. Pretty cool, right? And listen, I'm only going to show you one more here. I'm going to show you one more. We're going to move on. And I already know what I'm looking for because I know it's there. Okay, but here's Trisha Walker. Check this out. FXFire Comeback Indeed, February 12th. I have fulfilled my challenge from MTI, and I've captured over 570 pips within 17 hours. How many of y'all would like to generate this type of success within 17-hour time frame? You see, you get the picture? And so with that being said, folks, let's keep moving here. I just want you to understand that was one of my biggest questions, is how many people really succeed doing this? So here's my question to you. How many of you see yourself doing this and see yourself being able to do this? All right, so here's what you're going to get with the Ultimate Traders Package on Demand, okay, which is, once again, it's literally the most complete, the most comprehensive education out there. First is the 3-day Wealth and Freedom Experience Live. So for a lifetime, you're going to be able to attend this class in Lake Mary, Florida, or you can attend online, and basically, it's going to give you an in-depth and thorough understanding of the lessons that you're going to go through in MTI's education, and basically, on the third day, you're going to get to actually experience live practical results of everything that you're going to learn. Now, there's only 9 seats left for our next class, but if this is something you'd like to be a part of, type in your phone number at this time with the word class so we can go ahead, and I'll just make note of how many of you want to reserve a seat. Just type in your phone number with the word class. And by the way, I know that we're coming very, very close to time, so I'm going to kind of go through this real quick. But once again, if this is something you'd like to be a part of, just type in your number with the word class, and we'll definitely get you more information on reserving a seat, all right? Now, there's 3 components that you're going to receive with the Ultimate Traders Package on Demand. The first is the education and the infrastructure, and we already discussed that. Now, the second, okay, is the Financial Freedom Online University. All right, so it's a 5-phased approach, and basically it's a 16-week, at-home, self-paced, on-demand learning program that's going to allow you to learn on your own time, and it's going to drive home the principles that you learn in the 3-day Wealth and Freedom live event. Okay, you will have this for a lifetime. Now, you're also going to receive the Wealth Acceleration software package, and so once again, you're going to get the Fibonacci, the charting software. You're going to get the 2 other systems we didn't even mention. You're going to get the for the first 25 people, you get the FXFire as well, and once again, alarm function. So that is the education and the infrastructure. Now, let's go ahead and let's get right into the second component. And this is John R. He's an engineer from Grapevine, Texas. And I want to let you know that he works. So if anybody out there works, he was able to triple his account in just 6 weeks. All right. So let's talk about the second component, which is the tools for the strategy and planning. Now, first thing is the Pro Traders checklist. I already showed you that, okay? But I want you to know that if you're anything like me, you love checklists. This is going to give you defined steps, step by step, so that you don't make any silly rookie mistakes. All right. Second is the rapid results profit plan. So for those of you out there that want to have a goal, step by step, exactly when to hit a goal, when you can retire, when you can basically accomplish a lot of the things out there that you want to accomplish, that's the rapid results profit plan. All right, so that literally you can set a date on anything you want to accomplish, from growing your account to outside goals, okay? And then finally, you're also going to get the Success Now roadmap, and it's going to basically show you how to have more success now, and it's going to show you how to find the best places to find success, and you're going to know exactly what to do. All right? And finally, folks, last thing here, and I'm going to show you how to get your hands on it. Finally, this is where the rubber hits the road. Okay, in my opinion, this part right here is what separates MTI from anybody out there. Okay, it's literally the mentorship and the guidance. So first things first is in what I feel is the most powerful tool is the Analyst on Demand room. And this room is hosted by live professional analysts and traders that monitor the Forex market 24 hours per day. All right, so once again, you can literally log in and ask them, hey, where should I get in and where should I get out? What's going on today? And they'll tell you exactly what to do. Okay, so folks, quit wondering if you're doing things right. Just log in and ask. All right, second, you're going to receive a personal representative. So you will be working side by side with a personal coach and a mentor that's there to ensure your progress and get you, basically get you help and help you out along each step of the way, no matter what the question is, regardless what you face. They're there, designed and basically eager to help you and coach you from where you're at to where you want to be. And finally, last thing is the FX Cheap Fast Track mentorship. Okay, and this right here, folks, just imagine basically having, having access to a 25-year veteran, the founder of MTI, virtually right in your home to take you by the hand and show you exactly what to do. All right, so with that being said, folks, that is what you receive with the Ultimate Traders Package on Demand. And remember this, earlier I talked to you about what we invested into our students in 2014. Well, in 2015, all right, our goal is $3,089,485 US and just shy of 100,000 resource hours. Pretty cool, right? So once again, that's why we're an institute, folks, and I'm very, very proud of that. So I want you to know that I believe in this package so much that anybody who moves forward today, all right, like a lot of you are, I want to let you know that you're going to get 100% satisfaction guarantee. Okay, so you have 60 full days, 2 full calendar months, go through the entire education. If for whatever reason it's not for you, no big deal. We'll give you your money back. All we ask is that you go through the education. That's it. All right, so with that being said, folks, I will also tell you that we don't ask you to show us any actual trades or none of that, all right? Now, one more thing I want to ask you real quick is this. If all this package did for you was teach you the fundamentals of the market, giving you the confidence in your trading where you may become 77% more profitable than the average trader, would it be worth a 60-day test drive? Just type in a Y for yes if you believe so. And hey, John, I see that, John, you put class. Okay, if anybody out there typed in their phone number, all right, put in the word class to reserve a seat, but they didn't put their number. If you could just please type your number so we know how to actually get you that information, that would be awesome, all right? And cool, yeah, that's Lou and a lot of you out there that are typing that in. And so with that being said, folks, let's get right into it. I came here to empower, and I came here to serve, and I came here to make this program affordable for each and every one of you. So today, I want you to understand that the real-world value of our education is $12,610 US. Okay, but that's not the case. Okay, that's the real-world value. Now, the retail price of what we offer, if you go to our website right now, you can purchase it for $79.95. Okay. However, since we're part of a special webinar, what we're doing today, folks, is we literally slash $2,000 off of that, making it just 25% off, making it just $59.95. That's it. Okay. And for those of you that like what you see, you now have my permission. Type in your telephone number at this time, all right, with the word special, and we'll definitely get you kicked off. We'll answer all of your questions, all right? And if anybody out there is wondering, hey, is there like a month-by-month plan? Absolutely. I will certainly touch on that here in just a second. But once again, at this time, you have my permission to type in your phone number. If you like what you saw, all right, you want to move forward, you want to get on the phone with an educational specialist, and they'll definitely answer all of your questions, all right? So at this time, I do want to congratulate each and every one of you that are making the decision to move forward. And by the way, I also want to let you know that, yes, for the first 25 people, as I mentioned before, all right, that move forward today, for those of you, you will receive the FXFire on top of what I just showed you, all right, which typically we don't do. But once again, this is what we're offering right now. And so for those of you that want to take advantage of this, like a lot of you already have, all right, all I need you to do is just type in your phone number, right, with the word special, and that's awesome, okay? And let's see here. Okay, cool, Mark. I see what you said, buddy. All right. So with that being said, here's what we're going to do, okay? I came here to make this program affordable for each and every one of you. So for those of you that are sitting there thinking, look, I can't afford the education. However, okay, I can't not afford to not have this. I'm going to give you an option. And first of all, option A is one-time investment of just $59.95. That's it. Okay, $2,000 off. It's a webinar-only special. Then there's option B. It's the regular retail price. It's $79.95. Okay, it's just $1,000 down and flexible monthly payments after that. All right, however, please note that option A is the only option that comes with the actual savings. Okay, so at this time, you have my permission to type in your phone number with option A or option B. And once again, for those of you that have already typed in your phone number, if you could just please be so kind to let us know which option works best for you. And just remember, folks, you know, it's at least worth speaking to an educational specialist to get your questions answered, to go ahead and see, you know, even if we can come up with a customized payment plan for you, all right? So at this time, I want to congratulate the following. Thank you, Kurt. Kurt, I have your phone number with option A. Thank you, Sean. I have your phone number with option B. Thank you, Andrew. Andrew, I have your phone number with option A. Appreciate that, buddy. And thank you, Amy. Amy, we have your phone number as well. And thank you, Arden. I have your phone number as well, Arden, all right? And so with that being said, once again, folks, I do want to congratulate each and every one of you that are moving forward today. And remember, the reason we're an institute is because, you know, so I'll tell you right now, so many people out there, you know, will spend so much money on a college education, you know, but what you have to understand is that this is an institute, and we basically teach you how to become a professional trader. And that's why, folks, you have to ask yourself, what do you consider a return on investment? And so, once again, don't forget the Forex trading prediction, folks. And here's just Thomas S. from Ontario, Canada. He says, I made $4,500 in my first week. And then Anthony S. from Trinidad and Tobago says, I would say about a month after I started to see a return on my investment. An average month of trading, I'm making 3,000 plus pips. Not bad, right? And so once again, here's FX Caddy. He says, I've struggled for several months, but my rep got me focused, and I've made 575 pips in just 2 weeks. Pretty cool, right? So as I go ahead and wind down, I know I went over my time, and I appreciate the allocated time there. But as I start winding down, folks, I want to go ahead and just ask you and let you know that we here at MTI, we believe you're worth the investment. Hands down, 100%, no questions asked. We believe this education that I just showed you today is for you. However, the bigger question is, do you believe that you're worth the investment? Okay, so if you think that you're worth the investment, just type in your phone number at this time with option A or option B so that we can go ahead and answer all of your questions. All right, and once again, I do want to congratulate each and every one of you that are currently typing in your phone numbers with A or B. Erwin, I have your phone number, my friend, with option A. Thank you, Billy. I have your phone number with option B. Thank you, Mickey. I have your phone number with option A, saving $2,000 off. And thank you, Dave, as well, buddy. I have your phone number with option B, okay? So at this time, I'm going to keep moving, but I do appreciate each and every one of you that are making the decision to move forward. And I'm very, very proud of you, all right, for those of you out there that truly want to take a hold of this, all right, and move forward. So once again, I'm so proud of each and every one of you that are making the decision to act right now. And a quick little recap as I go ahead and close this out, all right, and end the presentation, okay? So once again, our education, the real world value is $12,610 US. The retail value of our education is $79.95. All right, if you go to our site, that's what you're going to see it for. But today, you're going to literally get $2,000 off, folks, making your one-time risk-free investment just $59.95. That's it. All right, and so once again, I'm very, very proud of each and every one of you that are making the decision to move forward, and for those of you that are going to be receiving the FXFire system as well. All right. So with that being said, folks, I'm wrapped up, and I'm going to go ahead and I'm going to get out of here. But once again, the one thing I will tell you, all right, as a note to leave on, is you went through this, right? I showed you Fibonacci. I showed you everything that I can show you today in the time that I have, and I've gone over my time. But I want you to understand that if you saw yourself doing this, if you're still listening to me right now, okay, and you have not made the decision to move forward, I want you to know that the only thing that people need to do to succeed is they need to step out of their comfort zone. And that's it. Because people don't like change, right? But I'm telling you, if you do the same thing you've always done, you're going to have what you've always had. And so if you want to have these type of results, it all starts by taking action. And one last time, as I go ahead and bring this to a close, you have my permission one last time to type in your phone number with A or B, okay, with option A or option B, and we'll go ahead and answer all of your questions, all right? So at this time, I want to congratulate the last few individuals. Thank you, Phil. I have your number with option A. Thank you, Xavier. I have your phone number with option B. Thank you, Lucian. I have your phone number as well, buddy, with option B. And Gerano, I have your phone number with option A, okay? So with that being said, folks, I appreciate all of your time. I had a blast. I really hope most of you learned something today. I know a lot of you did. And I really appreciate, all of you as well, having us on today and letting us share. So with that, folks, I had a blast. Thank you very much. Over and out. Actually, Capono, I want to just congratulate you, buddy. I have your phone number, and I see you're going with option A, and I'm very, very proud of you for making that decision, my friend. And we'll have an educational specialist contact you here in just a moment, all right? So once again, thank you all once again, and now over and out. All right. Thank you. All right, what I'm going to do, folks, as a matter of fact, I was actually under the impression there that Cyber Trading University was going to actually come back on, but no problem. What I'm going to do is I'm going to go ahead and just wrap this up. All right, and so what I'm going to do is as I close this out, I want to let all of you know that here's what I'm going to do for each and every one of you, okay? I'm going to put 60 seconds on the clock right now. For those of you that have an interest in learning how to get this for free, okay, I'm going to put 60 seconds on the clock. Type in your phone number with the word free right now, all right? And we will literally show you how you can get this for free. That's all you have to do. Just type in your number with the word free, and we'll go ahead and let you know. Okay, 60 seconds is on the clock. This is through our referral program. Okay, yes, this is real, and that's awesome. So, hey, Capono, my friend, I just want to ask you, buddy, if you could just type in yes, Capono, if you're available, if I have an educational specialist contact you real quick to answer all of your questions and kind of move forward, all right, bud? And, hey, Ringolds and everybody else, if you're just typing in the word free, just please let us know that, what your phone number is so that we know how to actually reach out to you. That would be great, all right? So at this time, thank you, Elroy. We have your phone number, buddy. Thank you, Capono. I'm going to have an educational specialist contact you right now. And thank you, Denise. I really do appreciate that, Denise. Thank you very much. All right, thank you, Raj. I have your phone number. And let's see, Rudolph is saying, is it too late to go with an option? No, it's not, buddy. If you want to, Rudolph, just type in your phone number with which option works best for you. It's not too late, my friend, and we'll get all your questions answered, all right? Thank you, John. I have your phone number. Thank you, Walter. I have your phone number. Thank you, Rudolph. I have your phone number with option A. Thank you, Elroy. I have your phone number, buddy. Thank you, Gallon. I have your phone number. And, folks, we're at 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, and that's a wrap. So with that, folks, I appreciate all of your time. Once again, I had a blast sharing with each and every one of you. Thank you so much to Cyber Trading University for having us on. And once again, folks, I'm going to leave this open for about 1 minute. All right. And if you want to call in, our number's on the screen, or if you want to type in your phone number within this next minute or so before we close this out, feel free to. All right. But with that, had a blast. Thank you all once again. Over and out.